Assalamu alaikum. Welcome to SBR revision series for September 2021. Today we are going to cover IS 33 earnings per share. For earnings per share, you need to remember a few things. That this is a ratio, right? This ratio is used to analyze the performance of the company. Through this, if it's increasing, if your EPS is increasing year on year, that means your company is performing well. Otherwise, it's not. Okay. And EPS, that means IS 33 are applicable only for listed companies. If you are unlisted company or if you are a small medium size enterprise, you don't have to. EPS is not for you. You don't have to comply with EPS. IS 33 is omitted. Okay, and every listed company have to disclose two types of EPS. One is basic, one is diluted EPS, and the formula is there, right? I'll be presenting you with the formula shortly. But mostly in SBR exam, more than the calculation part, the focus is on the impact of error on EPS. So they will give you some error. For example, they might say the profit is inflated or the asset is inflated or the number of shares inflated, something like that. Error will be given, and what would be the impact on EPS. That means whether EPS will increase or decrease based on that error. But it's better to know the formula for both in case it comes. So the formula for basic EPS is the normal way, EPS only, normal EPS. Basic EPS or you just write EPS is the same thing. Okay, earnings divided by your number of shares. Okay, that earning should be attributable to the ordinary shareholders. What does it mean? That means after you deduct your interest and tax, profit after interest and tax will go to ordinary shareholders, right? After you have paid your interest, after you have paid your tax, whatever is remaining will go to ordinary shareholders. So that earning, profit after tax or earnings, okay, divided by weighted average number of ordinary share. So basic EPS does not change. The next thing is diluted EPS. Here only you have to do some adjustments. The word diluted means definitely your diluted EPS will always be less than your basic EPS. Okay, the word diluted says it. So what is diluted? Let's see. At the year end, sometimes what happens, entity might issue more shares, right? It's possible during the year they can commit more shares. So due to that issuing of more ordinary shares during that period, you have to include this in your EPS. That effect have to be included in the EPS. Under basic EPS, that effect was not there. They take the ordinary number of ordinary shares same throughout the whole year, but in between the year the number of shares will go up or down, right? It might change. So that change, the impact of that change is not included in basic EPS. That's why we have to calculate diluted EPS. Okay, so if you're having more shares, how can this happen? If you're having a convertible loan, that means, let's say you have taken a convertible loan for 3 years. So for 3 years it will be loan, after that it will be converted to shares. So in that case your shares will increase. Next, share options. Share options will increase your shares. Then, so because of this diluted EPS is an estimate of the impact of these future share issues on an entity's EPS. Okay, so you calculate the same way only diluted EPS, earnings divided by number of shares, but the number of shares will change now. That will increase. So because your denominator is increasing, earnings nothing will happen, but your number of ordinary shares will increase. So because of that increase in shares, what happens? Your EPS goes down. Okay. So that's it for IS 33, and next we are going to cover IS 34, which is for interim financial reporting. This is also for listed entities only. It's not for SMEs and small unlisted company, and that's also very small standard. So till then, thanks for watching and see you in the next week.